Good morning, everyone. Welcome to Wake Up with Haley, Rise, Shine, and Live Aligned. I am so excited today for our episode. We are going to talk about all things mortgage. And I want to welcome on my good friend, Kelly Malatesta. Good morning, Kelly. How are you?
Good morning, Haley. How are you?
I'm great. Thank you so much for joining us today. I want to introduce you and tell everybody just a little bit about you, and then I would like for you to share some things about yourself. But Kelly is one of my good friends and longtime loan partners with First United, and she is an absolutely amazing loan partner. She talks clients and myself through personal mortgages, through transactions for years now, and she really stays on top of what's happening in the market. So we're going to have an exciting conversation today about all the things we know and all the things we don't know. Right, Kelly?
Right, absolutely.
Please tell us a little bit about yourself.
Well, I've been in the mortgage business for 29 years. It seems like I'm so old. I've been here so long, but I've enjoyed it. It's a fun career. It's been a delight to work with clients. I work for a bank called First United Bank, and the bank is about an $11 billion bank, and it's based out of Oklahoma, but we have banks all over Texas. We have two mortgage offices here in the Houston market. So I have been working very closely with a group of 5 women on my team, and last year we ended up closing $456 million. We helped 689 families get into homes, and so we were really excited and proud about that.
And you should be. That is so many families to help, especially coming off the cusp of COVID and the pandemic and, the crazy real estate market that we have endured. I know you and your team worked countless hours throughout last year.
Oh, yeah, it was crazy. I think we worked probably 10 to 12-hour days almost every day, just trying to get through and making sure we could get back to people. But it was fun. It was exciting. It was definitely challenging, but it was great to be able to help clients.
Absolutely. And help the buyers win the multiple offers, right? We had a lot of that going on.
Oh, I tell you, we have so many pre-approvals still in our drawers from clients that have not found houses yet. And hopefully, maybe this summer we'll have that opportunity.
I think so. I think we're seeing some shifts. We really are. So, good morning, Miguel. Thanks for joining us. Before we jump in, Kelly, to really dig into the mortgage pieces today, I really like to take a moment and start off with something good and to share something of, a piece of gratitude that we're grateful for. So would you kick it off and share just something good? It can be personal, professional, just give us a little bit of positivity.
Absolutely. Well, I'm very grateful I have twins that are graduating from college, and so excited. I've paid that last twin college bill, so I'm excited for their futures. I've got a junior at home that's about to enter her senior year, so things are great around the Malatesta household.
That's amazing. There is never a dull moment right now, I would imagine, with all that going on.
No, not at all. So a lot of exciting. And then we just added a new team member over here on the professional side. So we're excited about her coming on. Maddie Cox joined us, and she's going to be a great addition to help clients on the side.
Great. Oh, that's wonderful. That's a big addition. Well, I know your team works so hard. They're also amazing to work with. They take great care of us. So, all right. So let's kick it off and talk mortgage. I would love to just hear from you. We in the industry get asked constantly right now, what do you think is going to happen, right? What is your prediction? Where are we going? And so I would just love to hear from you. What is your prediction of the mortgage market right now?
We started off, all the analysts were predicting that we would be around 4.5 by the end of this year. And funny how we surpassed that and very quickly. I have never in 29 years seen rates move so quickly in 3 months. Every day we came into the office, the bond market was negative and rates were pushing up. People could not react fast enough. We were sending out estimates. They couldn't get back to us fast enough to lock in these rates. It was a very stressful time for borrowers. We do think that there's going to be 2 more rate hikes. The Fed's already talked about that, 50 basis points each. Our analysts are predicting rates to be anywhere around high 5s, maybe even up to 6.5. So it's just, we'll have to see. We'll have to see if the market starts, the economy starts slowing down to where this calms down a little bit. But yeah, the rates are definitely edging up.
Yeah, they are. They are. I know. And, I'm sure buyers call you all the time and ask you the same question they ask me. And that's, should we do it now? Right? Should we do it now? Do we think they might go down? Do we think they're going to go up? Tell me a little bit about how you answer that. What do you tell them? Because I know what I tell them, and it starts off with perspective, right? But what are you giving them advice on?
Well, everybody, and it's funny because it usually takes buyers and the market to kind of figure out, a lot of buyers are still calling and think rates are still in the threes, and it's a very depressing call when you have to let them know, no, we're over 5% now. So we're telling clients, we don't know with the inflation issue that's on the rise. We think having that rate secure is the best thing that you can do right now. There will always be a time that we can come back and refinance, but protect the rate now. We don't know how much higher it's going to go. So go ahead. We're fortunate enough to be able to offer some long-term locks for people that are buying and building. And, it's a scary thing when you go to build a house and you have to wait 12 to 14 months that you have no idea what the payment's going to be because you have to wait to see where the market's going to end up. So
Right.
we do have some, options for that. We're excited about doing those long-term locks for clients. It's not cheap. But it's definitely a way to give you some security in what your payment's going to be.
Right. Well, and I think it's a constant battle to fight against the fear that the media continues to incite, right? The media, if we allow ourselves to watch everything on the news, it puts the buyers and the sellers really into that state of constant fear and uncertainty, which we do have some uncertainty, right? But we also know what we know today. And that's the advice that I give my clients consistently is what we know today is really what we should act on because nobody knows what the future holds.
Absolutely. I totally agree with you. And people are going to buy houses and refinance and take equity out. There's always going to be life-changing events to where you do have to do those things. It was interesting. The First United head of mortgage sent us out a perspective piece, and he said, look, in the 80s, rates were anywhere from 13 to 16%. In
Yes.
the 90s, early 90s, we were averaging around 9%.
Right.
And, in the early 2000s, their rates were 5.85 to 6.335. And so at the end of the day, we're not, the prediction is not to go back to 13, 16%.
Right.
So, people are still going to buy houses. The market's still going to be good. You're going to have to refinance if you need to take money out. And, there's still going to be business, and there's still, I feel like it may bring us back to a little bit healthier market to where it's not as crazy as it's been.
Right. I completely agree. People on the outside of our industry say to me all the time, gosh, it must be such a great market. And I'm like, actually, no, you have no idea, right? Like it's a very challenging market. So a little bit of balance would absolutely make it a little healthier and less stressful for all parties. Um, I know you and I have talked about the recession word, right? Because that word tends to float through the media quite often. Um, isn't it true in history that whenever a recession has come through the United States, that typically interest rates go down? What are your thoughts on that?
Yeah, absolutely. Anytime you see any kind of economic issue happening in the market, like back we had the tech bubble, we saw rates change, we saw the pandemic where rates came down. When recessions happen, rates typically come down. It'll be interesting to see how it fares this time with the inflation, and if they can curb any of that to where we can get this to be a little bit steadier and a calmer market. So yeah, I certainly don't want to go into a recession, but I certainly hope we do see rates kind of even out a little bit.
Level out. Yep. No,
Yeah,
I agree. So right now in the market, what loan products are you guys seeing buyers choose the most right now? Are they going fixed rates? Are they starting to look at adjustable rates? Give us a little bit of background on what you see being popular.
absolutely. We are seeing, back the last 2 to 3 years, ARMs have really not, adjustable rate mortgages have really not been a factor. Everybody wanted a fix because they wanted to secure these low rates, these 2s and 3s and 30 and 15-year fixed. we are now, with rates coming back up, we are starting to see 7 and 10 and 15-year adjustable rate mortgages come back into to play. The other product that we've really seen emerge, and which makes sense, there is no inventory. We're seeing so much construction lending. There's one-time close and two-time close options out there. And so we're seeing a lot of people take advantage of those products, because if there is no inventory, you are going to have to go out and build. And so there's that. I think half of my business is construction lending right now. So
yes. And it's interesting too, because if the buyer can find land or a neighborhood where there's, lots of land available, my advice to them right now has been, well, you're either paying a premium for an older home, or you're paying a premium and choosing to wait a little bit for everything brand new. So if you can find the location, it absolutely makes sense.
I agree. Totally agree with you. And you're not buying somebody else's problem. We've all seen a lot of the inventory that's out there has a lot of issues on the homes. And so, we have found that I've seen clients that really want to be in a desired area, and they're willing to go buy the older home, but take advantage of a renovation type loan.
Yes.
And those loans are great, and those are out there, and they work a lot like construction loans. So, don't hesitate in looking. If you really want a certain area and you don't want to move out that far, you can use that product to go in and to do what you want to do and get where you want to be.
Absolutely, which is happening a lot right now throughout the Woodlands for sure. We've
Right.
got a lot of the township approving tear downs and rebuilds and total renovations. So it's a great option.
Yeah, I live in Hollymead, and Mary Ross has come in and basically, done that with, I don't know, 10 to 12 houses, it seems right now. But it's great. I love to see the revitalization and bringing everything, back up to newer standards. So
It is. Mary's done an amazing job in Hollymead. Yeah,
yeah.
and several other pockets as well, right? She's done a really nice job. So when it comes to construction loans, for anybody watching that may not really understand the difference between a one-time close or a two-time close, and just what the process of a construction loan looks like, will you give us some high-level background on that?
Absolutely. Okay, so a one-time close is basically we're taking the construction loan plus the permanent loan, and we're rolling those together. And the reason why we do it that way is because we want to make the process a little bit more efficient. We don't want you to have to go and gather docs twice. We don't want you to have to worry about the rates, because the benefit of that program is you're not paying fees twice. You're able to lock in the interest rate up front now at today's market, and that interest rate carries you through from the construction all the way to the permanent loan. And it's a great product. You get approved up front. You pay interest only during the construction phase, and then we roll you into the permanent loan. And so that right now is the most popular product. We use that same formula, that same process on renovation loans, to where you're locking in the rate. We set up an account at the bank for the money to renovate the house. You pay interest only during that construction phase, and then we roll you into that permanent loan. It's a great product. In between the construction and rolling or converting you into that permanent loan, you have the ability to pay the loan down. You're not stuck if you start out at one price because you haven't sold your home, and then you want to come in and you want to pay down that mortgage with the proceeds from the sale of that house. That's also available with the construction and the renovation program. So it's a really, really good product to be able to use in this market right now, where you want to capture these rates.
It is. It gives the buyer some flexibility, I believe. And it also, I know you're helping a couple of my clients right now build with the one-time close. And it gave them such just, confidence that, okay, we don't know how long the build is going to take because of obvious construction delays and material delays. So it could be 12 months, it could be 16 to 18 months. But knowing that they could lock in the rate now and then do the one-time close was huge peace of mind for them.
Taken into account like the supply chain issues and COVID issues. And so if you're building like a $700,000 house or lower, we're looking at a 12-month build. So you're going to get that 12-month plus your term. And we do offer a 30-year fixed on this product, which a lot of banks that do one-time closes typically offer ARMs, But the First United did come out with a 30-year fixed, and that has given a lot of peace of mind to people. They don't have to worry about refinancing an ARM in a few years, but it's a great way to be able to, secure your interest rate, secure your payment, not have to worry about it. This is your dream home. The other thing is if the project is over 700,000, then we give you 18 months to build. And if it's over 2 million, we add another 6 months to that. So we really give you the time to build the house during, this crazy time of supply chain issues.
Yeah, those are great time frames. And I know most of our custom builders here in the Woodlands area in Montgomery County are able to hit those. They have all seemed to do a really good job of pre-ordering and hedging against the material delays and things.
I found the same. Most of the good builders, I think some of the smaller mom and pop type builders are having the harder issues with that. But the builders that we've seen have done a really good job.
Yeah, they really have. We've got Richard Buckley. He's got a question that is asking, what are the terms and time frames given for construction loans? Which I know you just basically talked about the time frames. Maybe just some examples on some terms right now.
Yeah, so we do a 30-year fixed, we do a 15-year fixed, and we also do a 15-year ARM. Bank on an exception will do a 7-1 ARM, but they typically like the longer terms. They figure you're building your dream home. They figure people want the longer lock periods. And so that's why the bank has come up with those 3 terms.
Yeah. And usually that's correct, right? When the buyers choose to build, they are planning on staying there a little bit longer.
Absolutely. And when you go out into some of these markets, we've seen a huge surge with the Texas Grand Ranch and the Republic Grand Ranch and Stallion Lakes, all these newer developments. One of the challenges sometimes that we experience right when we get started in these new developments is appraisals. But we've actually been able to fare pretty well. Appraisers are doing a really good job of keeping up with the cost of building and making sure that appraisals are working. And so a lot of people ask me, like, what are you appraising? There's nothing to appraise. We actually send a copy of the contract, your budget, your selections, a copy of your lot, closing statement. So that appraiser is going out and looking at your lot, looking at if you built this house on that particular lot, what comparables are around. And so we've got some really good appraisers that work with us on these one-time close products.
Yeah, I'm glad you brought up appraisals because obviously that's a hot topic, whether it's a resale or a construction. But I, knock on wood, over the past 12 to 24 months, have not had many appraisal issues. They really have been doing a good job of keeping up with supply and demand and cost analysis and things that are making sure we're in real time.
Yeah, I agree. And some of the issues, the only issues that I saw a lot in the last probably I would say 6 to 9 months is that people building really, really small homes, we call them a jewel box. They're decked out with every amenity possible. And so those type homes have a little bit harder time appraising. So just if you want to do that, that's fine. We allow you to do it as long as you have the funds to pay the difference in the appraised value. So,
and that's such good advice because I know a lot of the empty nesters, they'll want under 3,000 square feet, but they want to put Sub-Zero and Wolf and Marble and make it amazing, but it's got the smaller square footage. And they do have to know going in that you might have to pay for some of those upgrades a little bit if the neighbors or the surrounding homes haven't decked them out quite as much with the smaller square footage.
Absolutely. One thing that we didn't touch on a lot on that one-time close, and I always like to bring this up, is like, people don't realize we have to be at a 43% debt to income. And so what happens is then if somebody can't qualify, because we do qualify, if you're living in your existing home, we are qualifying you with that debt. Let's say the house is paid off, we still count the taxes and insurance on that property in your debt to income. So if for some crazy reason you can't qualify for the 43%, we have a 2-time close option that allows people to still go ahead and build. You stay in your current home, build, but you are qualifying twice, right? You're closing on a construction loan, you're closing on a permanent loan. So there are some more fees. You are at interest rate risk. At that point, you're going to have to look at long-term lock options versus, the one-time close offers that lock up front. So there are alternatives to that one-time close, but obviously everybody wants the one-time close if they qualify.
Absolutely. Yep, is the better way to go. But it's great that there's options, because if
Yeah,
they do need to sell and convert later, then they have the option.
definitely. Absolutely.
So you mentioned misconceptions. Tell us a little bit on the mortgage side of what are the common misconceptions that you see buyers or borrowers typically have when they come to you for whatever type of mortgage it might be? What are some of the big ones that we could give some insight to?
Here's one of the things that is, so important. When you are getting ready and you're thinking about purchasing or building, get with a loan officer, because you definitely want to get prepared. You want to make sure that your income is reviewed. I find that a lot of borrowers will send in their applications with income that they believe is the income that they make, which a lot of them do make it, but if they're self-employed, a lot of them write it off, which we all want to avoid the tax guy. But we can only use income that is taxed, and that the IRS allows us to use, right? So it has to be taxable income. And, I find that to be the biggest struggle, because clients always think that they make more money than what we can use sometimes. And that becomes frustrating for them. And I understand that. But we're held by standards and guidelines by the government. So I always suggest get that income reviewed. Let us review that. People change from bonus structure. You may have just started a new job and started getting bonuses, and all of a sudden you get that one bonus and you want to go out and buy that $1.5 million home, but we need a 2-year average in order to count that bonus. So, we always recommend just let us review it. It's a quick consultation. It's 15-20 minutes, and it'll give you peace of mind during the process. Get that part
Absolutely.
out of the way.
Absolutely. We tell all of our buyers, in fact, we won't even put them in the car and start looking at things until they have that consultation. And it really, I tell them all the time too, it's also so that they can strategize with you, right? And figure out what is our best plan of action, what is going to hit our financial goals, what is going to hit the property goals, and what's the best path to take before they actually start house hunting. Because as you know, in this market, we don't have a whole lot of time to think through those pieces when you find a property that you want. You've got to be ready to take action and move forward. So to get the financial pieces in place is really important, and makes the process a whole lot more enjoyable.
Absolutely. I mean, you are getting bombarded, with the paperwork that you guys send them, the paperwork that the title company sends them, and then all of our loan requests. It's a lot. If you can get the financial piece done in advance, then you can focus on those other two pieces. The other things I see a lot where people, um, get interest rates quoted to them without looking at the whole picture, right? Somebody can quote you a low rate, but if you don't look at the cost, I found it very interesting. And I used to work at Chase. I worked at Chase for 16 years, and I called when the refinance boom started happening. I called them, I asked for an estimate, and I got an incredible rate. And I did that for comparisons, obviously. I got an incredible rate. And then all of a sudden I got the disclosures in the mail, and I started laughing because it was like 5 points for this
Right.
rate. I'm like, why in the world would you pay that? It makes no sense.
Right.
Usually for each point that you pay in rates, it takes you 5 years to recoup that money. As we see these refinance cycles, why are you going to prepay interest on something that you could refinance later that didn't cost you near that? So, I always tell people and tell clients, get estimates. Let's review exactly what you're getting,
Yes.
line by line. It's just critical, especially right now.
Oh, it absolutely is. And it's sad how many of the banking institutions plan on the buyers not reviewing the disclosures, right? And
Right,
then they
right.
get to the closing table, and one, sometimes they miss it completely, or two, it's too late to go backwards, and they're like, well, too late now, we're already committed.
Right.
Um,
I see that all the time. They move forward thinking this great option, and then they get down to the end and they're so frustrated. or the banking institution doesn't make their closing date. I can't tell you how many people we rescued that were at the closing table that called and said they're telling us that they won't do the loan. And I know you've experienced that, Haley. I mean, it's such a frustrating process for clients when they get told at the last minute, hey, we won't do the loan. One of the things we do up front is we do underwriting up front. We don't wait until 3 weeks in. We send the file first, and then we wait for appraisals to come in. And I love that process, because if there is something that we missed by or we interpreted the guideline differently, the underwriting is going to review it up front to make sure that piece is done.
Right. Before we have two families loaded in moving vans sitting and waiting to sign documents.
Yes.
Yep. I know.
Absolutely.
I think it was last year you jumped in and saved one of our deals. I represented the seller, and it was a $2 million property, and it didn't appraise by $500,000. And the buyer, who was not my client, lost the loan approval because of the appraisal spread. And so I sent them over to you, and not only did your appraiser actually do a legitimate appraisal, right, and got it to appraise, which was accurate, but then you got them closed in less than 3 weeks, and it was amazing. And that buyer, even though they weren't my client, were so happy and grateful for you guys. So yes, you're absolutely right when you say you jump in and save a lot of deals. You have done that for us quite a few times over the years.
Thank you. Well, I just feel for clients in that situation, because you have so much on the line. And, one of the frustrating things is if you do get a bad appraisal, you're like, what are your options? What can you do? There's some banks that won't let you dispute an appraisal.
Right.
We cannot shop for appraisals anymore. That's against the rules. We can't have any communication with appraisals. We have to go through an appraisal manager. But there are processes that you can do. You can provide comps. You can get with your agent, provide comps. And we have won many of battles disputing appraisals. And so you just want to make sure that you're working with an institution that has accountability, that allows you to do that if something should take place with the appraisal, because appraisals these days, the costs have gone up on those as well. So it's not a $350 fee anymore. So
no, I think I saw one the other day that was up to almost 1,500. They absolutely have. Yep.
Oh, I think there was a little bit of price gouging going on for a while on appraisals, because there just wasn't enough of them. That's definitely calmed down, and the turn times have gotten a lot better. But it is critical right now to use a real estate agent that has good experience in the business, like yourself, Haley, because you need to be guided during this time period more than any. Making the right offers, being strategic, and getting your deal accepted. It's a challenge these days. I mean, like I said earlier, we have tons of pre-approvals in the drawers just waiting for clients to find homes. So, having somebody to fight and guide you through this process, it's definitely needed in this market.
It is on both ends, right? That's what I tell the clients all the time. It takes a team, and you really do need a great team to be working on your behalf and to give you advice along the way. People that are doing hundreds of units, right? Because with each 100, we have so much more experience. I know I'm talking later today to a group, and when I was putting together notes, I was reflecting on the past 24 months and thinking, wow, I mean, I've done this for 23 years, much like you. And I still, every month and 30-day cycle, it seems like there's something new that we need to implement, right? To raise our awareness on another moving piece of the market.
I laugh. I tell my team all the time, and I'm trying to really implement this more and more. I love Chick-fil-A. And, if you go through the drive-through at Chick-fil-A, it's like they ask you your order. Then they repeat the order back to you. And then there's a person 10 feet down the road, down the, driveway, is asking you again. And, communication, and just making sure that you've gone over this with the client, because it is our job to guide clients through this process. And sometimes we all get busy, and we do this every day, and you have to stop and put yourself in their shoes and realize, like, it's different. It's challenging. It's not a fun process. So we need to make it as smooth and helpful for them as possible.
Absolutely. Absolutely. Well, tell everybody where they can find you guys. How can they get in contact with your team?
Sure, absolutely. My website is kellytx.com. My email is Kelly, and it's Kelly at kellytx.com. And then obviously, my office phone number is 281-367-0188.
Perfect. Thank you so very much for getting up early and jumping on with us to answer a few of these questions. I know we could really talk about mortgage and appraisals all day long and never run out of topics. Um, but we have clients to go serve. So I'm really grateful that you shared time with us today. And I will be talking to you later, I'm sure, about another client. So have an amazing day. And for everybody watching, you can find us at HaleyGarciaGroup.com. And again, we are on the first and third Tuesday at 7:30 a.m. We will have another great community industry leader the two Tuesdays away. So thank you for watching. Have a great day.